Palantir's stock has been on an absolute roller coaster, and if you own it, you've probably felt every bit of that ride. After skyrocketing over 300% last year, Palantir has suddenly collapsed, dropping 33% from its February peak. But here's the thing. This might not just be another pullback. There's a major shift happening in the AI space right now, and it could have a much bigger impact on Palantir than most investors realize. And the last time we saw something like this, it completely changed the trajectory of AI stocks, including Palantir. So the real question is that about to happen again? We'll get into that later, but before we do, let's break down what's actually been driving Palantir's wild price swings. Because once you see what's really going on, you'll understand why this next move could be a lot bigger than most people expect. Before we move forward, make sure to hit that like button if you find these deep dives useful, subscribe so you don't miss future updates, and turn on notifications so you're always ahead of the market. If you've been following Palantir, you know this stock doesn't move like most others. It moves faster and harder in both directions. The stock was on fire, climbing over 300% in a year, but then came a brutal 33% drop from its February highs. That kind of move can shake up even the most confident investors. So what's behind this? A mix of economic uncertainty, political instability, and a broader tech sell-off. But here's what most people haven't noticed yet. After 3 straight weeks of declines, Palantir bounced back, and it wasn't random. That rebound came right after the announcement of 6 new clients and a major partnership with Databricks. And let me tell you, that Databricks deal might be the most important thing to happen to Palantir this year. But what's really surprising is how this partnership connects to something bigger that's happening across the AI industry, and we'll get to that later. Right now, traders are locked in on one key level. Palantir is hovering around $87, and this is a critical support zone. If it holds, a pushback to $100 is on the table, but if it breaks below 85, we could be looking at a sharp drop all the way down to $66. One reason Palantir moves so aggressively is because it's a high beta stock, meaning it's way more volatile than the overall market. That's what happens when a stock like this magnifies whatever the broader market is doing. If tech is rallying, Palantir usually outperforms. But if the market is selling off, Palantir gets hit even harder. Wedbush analyst Dan Ives believes this sell-off is actually a huge buying opportunity. He's been one of the most vocal bulls on AI-driven companies and sees this dip as temporary before the market stabilizes. In fact, he's predicting a $2 trillion AI capital spending blitz by big tech in 2025, and if that happens, Palantir could be one of the biggest winners. But what happens next depends on 3 key factors. Market sentiment. If tech stocks start recovering, Palantir will likely follow. AI hype cycle. If investors keep piling into AI stocks, PLTR will benefit. Technical breakout or breakdown. A break above $100 could send it to $125, but losing support could lead to steeper declines. So is Palantir setting up for a massive comeback, or is there more pain ahead? Well, part of the answer lies in what analysts are saying. And let me tell you, it's a battle between extreme optimism and major red flags. Some say $125 is coming, while others are saying stay far away. But the thing is, these analysts aren't just reacting to Palantir's stock movement, they're reacting to something much bigger happening in AI. And that's exactly why Wall Street is so divided on this stock. Some believe Palantir is on the verge of a massive breakout, while others think there's more pain ahead. That kind of divide doesn't happen for no reason. There's a real battle happening between extreme optimism and major red flags, and understanding why analysts are so split could tell us exactly what's coming next. Alright, so we've broken down why Palantir's stock has been all over the place, but the real question is, what are the experts saying? Because Wall Street is completely split on this stock. Some analysts believe Palantir is on the verge of a massive breakout, while others are warning that more downside is ahead. And if you're an investor, this is the part you really need to pay attention to, because once you understand why analysts are so divided, you'll have a much clearer idea of what's actually coming next. Loop Capital's Mark Schappel is one of the most bullish voices on Palantir right now. He recently upgraded the stock with a $125 price target, which is about 58% higher than where it's trading today. And his reasoning? Palantir is checking every box for what a dominant AI company should be right now. He points to 5 key strengths. Palantir is a category leader in AI-driven analytics. It has a strong competitive position, especially in government contracts. Its profit margins are already strong, but still have room to expand. Unlike many AI companies, Palantir is generating real cash flow. And finally, it has a rock-solid balance sheet, which means it's not relying on debt to grow. But not everyone is convinced. Jefferies analyst Brent Thill is on the complete opposite side of the argument. He's maintaining an underperform rating, meaning he believes Palantir is overvalued even after the recent dip. His biggest concerns? Valuation and insider selling. Let's talk valuation first. Thill believes that even with all the AI hype, Palantir's stock is still trading at a high multiple, meaning investors are already pricing in too much optimism about future growth. His argument is basically, Palantir has to deliver perfect execution to justify this valuation, and anything less could send the stock even lower. Then there's insider selling. CEO Alex Karp has been aggressively unloading shares, selling $45 million worth of stock in just 2 weeks. And it's not just him. Insiders have collectively sold over $2 billion worth of stock in 2024 alone. Now, to be fair, insider selling isn't always a red flag. Executives sell stock for a lot of reasons: tax planning, diversifying their investments, or just cashing in after a massive run-up. But here's the thing. If Palantir was truly undervalued, wouldn't we be seeing insider buying instead? That's why some investors are getting nervous. And then you have William Blair analyst Louis De Palma, who's somewhere in the middle. He's not as bearish as Thill, but he's not bullish either. He's keeping a market perform rating, meaning he's neutral on the stock. He acknowledges that Palantir's AI partnerships, like the one with Databricks, are a huge step forward, but he's not convinced the stock is worth chasing at these levels. So where does that leave us? On one hand, you have analysts predicting a breakout to $125. On the other, you have warnings that Palantir is still too expensive. And if you're wondering who's actually putting their money where their mouth is, well, that's where things get even more interesting. Because while some analysts are shouting about overvaluation, certain big money investors are quietly increasing their stakes in Palantir. And when it comes to stocks like this, what hedge funds and institutions are doing often speaks louder than what analysts are saying. Let's break that down. So we've seen how analysts are completely split on Palantir. But here's where things get really interesting. Because while some of them are warning about overvaluation, big money investors are making their own moves behind the scenes. And when it comes to stocks like this, what hedge funds and institutions are doing often speaks louder than what analysts are saying. Let's talk about who's actually buying and who's getting out. Because when you follow the money, you start to see a much clearer picture of where Palantir could be headed next. Parallel Advisors LLC recently cut its Palantir holdings by 4.6% in Q4, selling 1,000 shares and bringing its total ownership down to 20,800 shares. Sequoia Financial Advisors LLC did something similar, trimming its position by 2.9% and offloading 8,478 shares. Now, this isn't a massive sell-off by any means, but it does tell us something. Some funds are locking in profits after Palantir's massive run-up last year. And it makes sense. This stock tripled in value in just over a year, so naturally, some investors are going to take money off the table. But here's where things get interesting. While some institutions are reducing their stakes, others are actually increasing their exposure. Pinion Investment Advisors LLC recently bought 3,169 shares of Palantir, seeing this pullback as an opportunity. And if we zoom out, here's the bigger picture. Institutional investors currently own about 34.21% of Palantir's stock. That's an important number because it shows that while big money players aren't fully dominating the stock, they also haven't backed away. Retail investors still hold a significant portion of Palantir, meaning individual traders still have a lot of influence on price movements. Now, institutions making moves is one thing, but what about the people inside the company? Because if there's one thing that can shake investor confidence, it's insiders aggressively selling their shares. And that's exactly what we've been seeing. And he's not the only one. Stephen Andrew Cohen, another Palantir insider, sold 450,000 shares on December 11th at an average price of $70.95, cashing out for around $31.93 million. Now, before jumping to conclusions, let's be clear. Insider selling doesn't always mean trouble. Executives sell stock for all kinds of reasons: tax planning, personal investments, or just cashing in after a major stock run-up. But when you see this level of selling from the CEO and other insiders, it does raise some questions. If they believed Palantir was massively undervalued, wouldn't we be seeing some insider buying instead? And this ties back to what we talked about earlier. Analysts are split, institutions are making mixed moves, and insiders are selling at a rapid pace. So what does all of this actually mean for the future of Palantir? Well, that's where the big picture macro factors come into play, because everything we've talked about so far is happening against a much larger backdrop. And if you're invested in Palantir, you need to know how interest rates, global trade tensions, and the AI boom could decide what happens next. All right, now let's zoom out and look at the bigger picture, because everything happening with Palantir right now isn't just about the company itself. The broader economy, government policies, and the AI industry as a whole are playing a huge role in where this stock goes next. And if you're holding Palantir or thinking about buying in, these factors are what will determine whether this stock rebounds or keeps sliding. One of the biggest forces at play? Interest rates. Palantir is a high-growth tech company, and stocks like this tend to struggle when interest rates are high. That's because when rates go up, borrowing costs increase, making it harder for companies to invest in expansion and innovation. Investors also shift their money into safer assets like bonds, pulling money away from stocks like Palantir. Lately, there's been a lot of speculation about whether the Federal Reserve will finally start cutting rates. If they do, that could be a massive tailwind for growth stocks, especially AI-driven companies like Palantir. But if inflation stays high and the Fed delays rate cuts, we could see continued pressure on stocks like this. Then there's the geopolitical side of things. Recently, the U.S. government has been talking about new tariffs on key imports, including tech-related goods. There's also rising tension with China, which affects sentiment around government contract-heavy tech stocks like Palantir. Why does this matter? If tariffs increase, tech companies that rely on global supply chains could see rising costs. While Palantir itself isn't a hardware company, it operates in an industry that could be affected by higher costs, delayed spending, and shifting government priorities. That being said, Palantir also has a potential advantage here. Since a lot of its contracts are tied to U.S. government defense spending, increased geopolitical tensions could actually benefit Palantir in the long run, especially if we see ramped-up government investments in AI and data security. But here's where things get even more interesting. Despite all these macro pressures, one major force could override everything else, and that's the AI boom. Palantir is sitting right at the center of the AI revolution, and if there's one thing that could keep pushing this stock higher, it's the rapid adoption of AI across industries. Wedbush analyst Dan Ives has been pounding the table on AI stocks, saying that big tech is gearing up for a $2 trillion AI capital spending spree over the next couple of years. And if that happens, companies that provide AI-driven enterprise solutions, like Palantir, could see massive growth. Think about it. Governments, Fortune 500 companies, and financial institutions are all racing to integrate AI solutions. And Palantir's artificial intelligence platform, AIP, is built specifically to help companies make sense of their data and automate decision-making. Even if interest rates stay high and tariffs create some market turbulence, the demand for AI solutions isn't slowing down. And that's the biggest argument for Palantir being a long-term winner in this space. So now, the big question is, what does all of this mean for Palantir investors right now? Well, here's the bottom line. Palantir is stuck between two opposing forces. On one hand, we have macro headwinds like interest rates, economic uncertainty, and insider selling. On the other, we have massive AI tailwinds that could drive long-term growth. If rates stay high and the market struggles, Palantir could face more short-term volatility. But if AI investment continues at the pace analysts are predicting, then this stock could defy market conditions and keep climbing. And that brings us back to the one thing we hinted at earlier, the shift happening in AI. A lot of people are focused on Palantir's past stock movements, but what they're not seeing is how the company is positioning itself for the future. The AI industry is evolving fast, and the companies that survive this next phase aren't just the ones that have strong tech, they're the ones that can scale and monetize it. Palantir is now partnering with some of the biggest enterprise players in the world, expanding its reach beyond just government contracts. That's the part that could change everything for Palantir in the long run. So what do you think? Is Palantir's AI momentum enough to push past these short-term hurdles, or do you think the stock still has more downside ahead? Let me know in the comments. If you got value from this breakdown, hit that like button so more people can see this. And if you haven't already, subscribe to the channel and turn on notifications so you don't miss the next update. Because if you think this was valuable, wait until you see what's coming next.